Good evening, good afternoon, good morning, peeps, whenever this video finds you. So Tom here. We're going to do an in-depth review of the sterling yen that I've been watching for the past couple of days and try to give an idea of what exactly is going on. Why are we stuck in this range? And I think that the easiest way to describe it is that it is the concept of dualism happening right now, the yin and yang of the marketplace. Opposite and contrary forces are actually complementing each other, being complementary, and forcing us to stay in this tight range until one wins. All right, so basically what's going on is let's look at it this way really quickly. There are short-term trends in the marketplace. There's an intermediate trend, and there's the long-term trend. Now, inside the short-term trend, you have your dailies. You got your 4-hour charts. You got your 60-minute charts. You got your 30-minute charts. You got your 10-minute charts. You got your 15-minute charts. Whatever, all those charts. Think about that. All the inside, all these different little trends are going on all at the same time. And then your intermediate term, you got your weekly. Basically what I have up here is, like, if you see, I like to look at like what's going on in the weekly charts, because this is 1 week's worth of data. This is just finishing up another week's worth of data. Okay, so that's your intermediate term, and then you got your long term, which is your monthly. Like the big cycles and things. Okay, so let's just work with the ABC patterns and D patterns of a Fibonacci type of retracement. Now, I know a lot of you guys are working with laws and you're working with support and resistance zones, and that's exactly what you need to focus on. This is just an added tool for you to look at. Just throw in your toolbox so it gives you a better understanding. Maybe this helps you out analyze a little bit better, so you can adjust those zones a little bit so you can get in instead of missing entries by a certain amount of pips. You can maybe adjust a little bit, but again, you follow his teachings. They're exactly they are right, because he's following a Wyckoff method, and that is basically the right thing to do. Okay, and I believe Wyckoff was the one who said that in speculation, you need to have basically how do you put it exactly? Oh my gosh, I can't believe Wyckoff. What did he say exactly? Come on, maybe laws can help me with it. But he basically said in speculation, you need to be able to project forward. In other words, you need to have an ability to look forward. Okay, like all speculation itself, you need to be able to predict the next movement of importance. That's a better way of putting it. He didn't say it that way, but that's pretty damn close to what he meant by it when I remember him talking about it. So, all right, so let's look at this. Now, this is going to be, the short term. Okay, it's going to be in the daily. Okay, so I found this pivot high. Now, I just didn't go and pick this pivot high because the market started coming down, and every low I could have went to the left to find this high. So I'm always going to the left of the chart to find out the last time the market traded lower than this point. And I can go over here and say, okay, what's the highest point between this one and this one? It's going to be this one. So this one's going to be my reference high. Now, obviously, it kept going down until it finally met the trend reactionary number. Okay? And the market closed up above the trend reactionary number. So now I would do the same procedure. I'd say, okay, market closed here. I'd go to the left to the last time it traded lower. I'd find this reference high right here. And this reference high is 135.91. Okay? And the bar that I'm working off of is right here, 134.28. Okay? So I'm going to take the difference, 135.91 in, 134.28 out, and I'm going to come up with 163 pips. Simple enough. So I'm taking the difference between the high of A and the low of B. I'm getting the range of the market right there. All right. Now, what most people do with Fibonacci ABC sales is they look to sell around the 618 mark, okay, or better, right? Okay, so what we do with that 1.632, the difference between the high of A and the low of B, is we're just going to multiply that 1.63 multiply by 0.618, and we're going to come up with 1.0073. Okay, is that right? I'm going to do that again. 1.0073. Okay, so we got 1.63 multiplied by 0.618. Yeah, so it's 1.0073, and I'm going to add that to the low, 134.28 plus 1.0073. I'm going to get 135.28, which is right here. This is our 6.81 retracement up in the market. Okay. Now I don't use the 0.786 in the fib ratio. I've changed my fib ratio to 0.82. It's not much of a difference, but it seems to sometimes catch it perfectly. But however, the 0.786 would have been closer this time around than my 0.82. My 0.82 lands right here at 135.62. All right. Now I think if I take this 0.786, so if I go 1.63 multiplied by 0.786, I'm going to get 128, 1.28 plus 134.28, and 135.56, a little bit lower. Okay, so it was actually a little bit more accurate this time around. All right. Now, I want to bring something up to you guys. It's important, I think. A lot of times what traders say is like, okay, if you break this point and you're trending up, and then you break the 0.82 and you're trending up, well, the market's gunning for the high. It's gunning for this high. It's not the case. It's gunning for this high day's close. That is what's more important than the high itself. The close of the bar is more important than the high of the bar. So put that down in your notes and go back in time and look. A lot of times people are looking for the top to break, and it doesn't. It goes right to whatever the close was on that, or a little bit beyond. It doesn't make the high. Matter of fact, it would probably go to this down close high if it was going to break up, and then if it was going to reverse down, it would use that down close high. But that's just adding, just throwing it in out there for you, so you got something extra. Okay, so you got your sale level, 618 is here. You got 0.82 up here. Here's a pretty good sale zone. Bang, market comes off. Now, what's the target? Well, the target is usually 1.382 down. So if I take the 1.6320 and I multiply by 1.382, I come up with 2.26. Okay? So if I take the high, 135.91, and I take out 2.26, my target's 133.65. So I'm going to take this thing, I'm just going to 133.65. Okay, that is the 1.382 down. Now, as you can see, now you would also look for 1.618, which would be lower than this, but it didn't even go that far, so why even bother? Okay, so the market came down and it just could not. Okay, it was 30 points away from it. Oh, yeah, 33 points away, 32 points away from it, and then kind of went back up into this area, and now it's still fiddling around. But I want you to notice one thing. And now, if I went to the dailies, okay, matter of fact, I'll do that. It's probably going to be a mess. But if I go to the dailies, and I go here, and I go like this, you'll notice that we don't, since we made this top, we don't have one close below the TRN. Or even one close below that bloody 134.45. It's all sitting right here. Something's going to happen. we won't know until the market decides. But right now it's in a balance, in equilibrium, yin and yang working perfectly together. I would assume, and I would think that, you know, if we close below this 134.37, really the rule is if you close below the 134.45, you got a chance to push down and go to that target. But it hasn't done it. You know, even when it made this high, well, I would have to go and find exactly those points. But sticking with this example, we would need a close below that to show bearishness, real bearishness. So this thing is still chopping around. I don't, you know, but I wanted to give you that analysis. But that TRN is really important. That trend reactionary number is really important. All right, I'm going to put this video up, and then I'm going to do a longer term video. I'm going to go use these dailies, and we're going to use a daily to figure out what's going on. You know, we're going to use the top. We're going to use this top. We're going to go across. What's the lowest point in between? It's this guy. I mean, that's far away. But it's basically, this is now, you know, the intermediate term going weeklies. Okay? And then we can figure out, you know, what points we need. All right. Cheers. I hope it was cool. Cheers.